Well, President Trump making efforts this week to pitch Americans on his plans to improve affordability. But as an investor, how should you be thinking about it? My next guest recently authored a note highlighting which stocks could be winners in this environment. And joining me now, we got Drew Pettit, Citi U.S. Equity Strategist. Drew, it is great to see you. So let's dig into this report, Drew. At a high level, you're pointing out here, listen, populism is on the rise. It's certainly true. Politicians on both sides, obviously very laser focused on affordability, the issues of economic anxiety. I guess at a high level, though, Drew, walk me through how that policy shift, how and why, Drew, it favors fintech.
Yeah, it's funny. So super high level to really kick this off. We like financials. We actually feel pretty good about the economy. So credit, we think, holds in there. We think the consumer does prove to be resilient again this year. With that in mind, that should be a good backdrop for all financials. But when you move away from deregulation, which really helps bigger, more established companies in the space, down to policy tweaks, changes, populism, that actually helps disruptors and faster moving companies. And those that are really trying to get at inefficiencies in the system, that's fintech in a nutshell.
So, Drew, if that's sort of the thesis, then how do you screen for that, Drew? How do you screen for this kind of this fintech populism play? Like, what are the variables, the metrics you're plugging in?
Yeah, it's funny. This is a lot of reading through documents. It's really digging into what these companies are trying to achieve. And when you think about this, there is actually old school fintech, which honestly, just credit cards and payments in the background, that's fintech, but that's almost old fintech. New fintech is about what fees are between me and you, or me and a business, or me and a financial institution. Who is trying to actually lower that cost or cut out some of those steps? So that's number one. And then number two, if we're trying to juice the economy, push up affordability, help the consumer in a midterm election year, I want someone that's playing to small and medium term businesses or retail directly, because they're going to see the biggest tailwinds. So to us, like, it was those two things. Who's your target market, and what is like your actual goal of your business? Is it to disrupt and drive efficiencies?
Were there certain fintech subsectors, Drew? I'm just curious that, screened particularly well, like under the hood. Was it payments? Was it BNPL?
Yeah, so BNPL, Affirm, Klarna really kind of stood out. Again, alternate means of getting credit. Then when you think about digital assets as well, just the idea of digital assets was about populism in the financial system. And again, more efficiency working on digital rails, not the current system we have. So that gets you to, something like a Circle, a Coinbase, a Bullish. And then even as you go down the list a little bit further, you start thinking about disruptive lenders in the space like a SoFi. And I see you guys have the CEO coming on tomorrow. So all of these are, again, while decent sized companies, they're disruptors to the incumbents. That's really key to us. A lot of these are running on technology rails, not traditional systems.
Yeah, I'm just looking through some of the winners your team of very smart analysts picked out here. There's Affirm. I see Intuit there, Drew. HubSpot makes the list. Coinbase. Many investors, Drew, when you talk fintech, they think, okay, immediately your head goes to regulation. Was that, is that a risk I need to consider in my fintech populism playbook, or no? Maybe I'm thinking about it incorrectly, Drew. Maybe you would say, hey, that's a potential positive. That's a potential tailwind.
Yeah, so you got to think about this in two spaces. Number one, there was sell-off when we started talking about the credit card rate caps and interchange fees. That hit the BNPL names. Initially, they kind of traded up that day and then got weaker throughout the day. But actually, it's a lot easier for a fintech who's already trying to take share and price aggressively to change their pricing structure. So I think the market may have kind of over-traded that negative news flow. And then on the flip side, for some of these businesses, especially in digital assets, increased regulation basically says our business is real. It affirms that they should be around. And we're moving away from, I would say, enforcement world where the SEC comes after you if you do something bad in digital assets and move too quickly, to a regulation world, which if you're already in the space, you know how to operate, you can adjust from there. So regulation is actually good for digital assets and some of these newer companies.
Drew, you do mention here how this basket, you say it is high beta compared to other equities. So there could be viewers watching this, Drew, and they're thinking, I like Drew's idea here, but I'm concerned maybe about volatility. I mean, how would you imagine, Drew, that this kind of fintech basket would just sort of fit into a broader, diversified portfolio?
Yeah, it is definitely a satellite position. These aren't core holdings. But if you have a bullish thesis around the consumer, you're going to get these volatility bouts where you can buy into the basket. Today's a really good example. The other day when we had weakness on consumer confidence, if you think that is moving past, then these are the better leverage ways to play it. The way I'd think about it, because they're relatively high beta to traditional financials, instead of buying $1 of financials, you might be able to buy 50, 60 cents of a fintech populism basket like we put together. So again, smaller dollar amount probably gets you kind of similar overall exposure in beta. So to us, if you got conviction in the trade, you probably need less fintech to get exposure to it.
Finally, Drew, what would you say, the big risk or risks I have to think about with what we're talking about here? I mean, one I would think, but tell me if I'm way off, would be what if, Drew, all this hot political talk, and there's been a lot of it, but what if it doesn't, at the end of the day, Drew, translate into any real hard, concrete policy action?
So it's funny you mentioned that, because even without the policy action on credit card caps, you started seeing some companies make some announcements and consider some moves in the background. Even without moves on interchange fees, that is now in CEO suites, like that is being discussed. These types of actions, whether it's the Republicans or the Democrats, if we're going down a populist path, you don't necessarily need regulation. You just don't want to be in the crosshairs. So you're going to get and elicit a corporate response just by putting these companies in the headline. So to us, you don't necessarily need regulation if the tone stays around. But at the end of the day, if it drives the consumer forward, it ends up increasing liquidity in the system. The fintech names are probably your biggest winners, more so than consumer and traditional financials.
Drew, always a pleasure to see you, my friend. Thank you.
Okay, take care, Josh.